Okay, fantastic. So welcome everybody to today's very special training, how to trade commodity-linked currencies, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will go through a watch list of trading ideas. There's been some big moves in the markets, certainly even today actually on the commodity currencies that we can have a look at, some trading opportunities which are lining up. We'll go through a forecast of where we expect Australian dollar, US dollar, New Zealand dollar, US dollar, and US dollar, Canadian dollar to be heading next. We'll also take a look at oil, gold, and silver too. We'll be answering questions, providing live support. As always, guys, we'll keep it very interactive. So any questions at all throughout the session, feel free to put those into the chat. I will just very quickly send you all a message in there so you know exactly where that is. Okay, this is the link which we'll discuss a little bit later in the session, but just so you are all aware, you can ask any questions into that chat function, join the session, and we are more than happy to answer those, okay? So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, please do visit our website, which is www.thegoldandsilverclub.com. Okay, good. So with that, we'll be looking at the commodity currencies today. I'm sure a lot of you are aware of these markets already, but if not, just to give you a little bit more of a breakdown in terms of exactly the markets that this focuses on and the intermarket correlations that you need to be aware of. The commodity currencies, they are from countries that possess large quantities of commodities, which often constitute the majority of the country's exports, and the strength of the economy can be highly dependent on the prices of these natural resources. So most notably, the Canadian economy, the country has a very large quantities of commodities, including natural gas, timber, and oil. This makes Canada's economy very sensitive to commodity prices. The Australian economy as well. Australia is one of the world's most natural resource-rich countries, has a large holding of gold, iron, coal, and aluminium, and as such is also sensitive to movements in those commodities. So if we take a closer look here, Australian dollar, US dollar. Now, Australia accounts for a third of global iron ore and gold production, so it does move quite significantly with the ebb and flow of iron ore prices and also gold prices as well. It means Australia's fiscal revenue is very sensitive to changes in metal prices. Based on intermarket relationships, the Australian dollar is tightly correlated to iron ore and gold prices. For example, over the last week, we saw iron ore break out over 7% to the upside. It also caused a breakout on Australian dollar, US dollar to 1 month highs. So there's a very strong correlation and relationship between those markets, and also gold prices has an impact as well. When iron ore and gold prices go up, generally speaking, Australian dollar, US dollar goes up. When iron ore and gold prices go down, typically Australian dollar, US dollar goes down as well. So that is the relationship that we can have a look at very shortly when we move over to the charts. Now, the commodity currencies also include US dollar, Canadian dollar. Canada is the 6th largest oil producer in the world, about a quarter of whose export is oil. So this makes Canada's economy very sensitive to oil prices. Fluctuations in oil prices can be traded via US dollar, Canadian dollar. Essentially, there is an inverse correlation with US dollar, Canadian dollar versus oil. So when oil prices go up, US dollar CAD goes down, and when oil prices go down, US dollar, Canadian dollar goes up. So the Canadian dollar essentially tracks oil prices, but you can trade it with the inverse relationship with US dollar, Canadian dollar. Very useful from that point of view. Oil has actually had one of the strongest weeks this week, or over the last approximately 7 trading days, until today actually, where we've seen a bit of a sell-off, which was expected because we have seen one of the strongest rallies over 2017 so far, a $5 move for oil, which has been quite impressive. But it positions now the US dollar, Canadian dollar in a potential area of support where it could bounce and start to rally, which we'll take a look at very shortly. So before we do that, I'll just break it down for you in terms of our portfolio performance. our trading performance using our exclusive research-driven strategies. So over the last week, we have definitely taken advantage of the breakout in oil prices. So we capitalized on the long side, going for the price to close higher. In fact, that's continued to be the case over the last week, and that has been very profitable for us trading oil to the buy side. We've also taken advantage of the breakdown in gold, most notably after it broke through 1238 and the monthly pivot yesterday. So an entry at 1239 just for the price to be lower the same day has resulted in a win. And also Australian dollar, US dollar has broken down significantly too over the last 3 days, and we capitalized on that move after it got very overbought at the weekend, and that's been just a really nice move to see it break down over the last 3 days as well. So we'll have a look at that very shortly on the charts as well. Before we do so, let me just talk you through some of the key news items which you've got coming up today and also this week that you should be aware of. So first of all, we have the minutes of the FOMC meeting. Those are due to come out at 7 o'clock London time in 2 hours. What does that mean? Why is it important? Okay, so the minutes of the FOMC, they come out 3 weeks after the FOMC statement. They are important because at the last FOMC statement, we saw a very large move to the downside for gold, for silver, for a number of commodities off the back of the US dollar surging. It was essentially a hawkish FOMC statement with an increase in interest rates and the potential for the Fed to go ahead more aggressively with interest rates. So we want to be watching very carefully as to whether that is going to be the stance from the FOMC statement. Gold prices have remained under pressure over the last week amid indications that several major central banks around the world are getting ready to join the Federal Reserve in tightening the monetary policy. So with that, that has had an impact. If you're wondering why gold and silver are trading at such low prices at the moment, that has been one of the reasons that we've seen such a significant decline. We'll have a look at the chart on that very shortly. Also, bear in mind, this week is non-farm payroll week. So Friday will be important. So non-farm payrolls is coming out on Friday at 1:30 London time. And we also have a lot of data coming out tomorrow because it was Independence Day in the US yesterday, and as such, because of it being a bank holiday over yesterday, a lot of news items have been shifted forward one day. That includes crude oil inventories, API data, which is coming out later on today for oil as well. Essentially, we've got a lot of data points coming out tomorrow and Friday. So what does that mean? It means expect volatility, but that is good for us as traders on binary.com. Why is it good? Because with binary.com, you don't need to have large stop losses or big take profit targets. All you need to get correct is the overall direction of the market within a given time frame. So whether you want to be in and out of the trade within 10 minutes, half an hour, 1 hour, 2 hours, 3 hours, 5 hours, 1 day, a week, all you need to get right is overall the entry, of course, the direction of the trade, and then the timing of when you exit out of the position. I think binary.com is fantastic for trading volatile moves in the market, major news items, and you've got pretty much a scheduled news item most days of the week. You've got anything from non-farm payrolls to minutes of the FOMC, FOMC statements, GDP numbers. We've got the European Central Bank speaking. Tomorrow you have oil inventory data coming out every Wednesday, Baker Hughes, oil data, oil rig data coming out every Friday. You have API data, which comes out every Tuesday. There's a lot of different announcements which you can trade via binary and take advantage of these shorter term moves. Now, just to break it down for you, in terms of risk on the platform, I'm sure a lot of you are aware of this. This will probably be a recap, and if you haven't come across this before, this will just be a little bit of a learning for you as well. This is what a deal ticket looks like when you are opening a trade on binary. Very simply, you've got high or low or up and down trades. You've got also touch and no touch, in and out. We tend to favor the up and down, the higher and lower type of trade because that's very straightforward. You don't require the price to stay within a barrier or hit specific levels. It just needs to close higher than your entry price or lower than your entry price, depending on whether you're looking for a rise or a full trade. You can pick the timing of the trade, so start time now, how long you want to be in the trade, could be minutes, could be hours, could be days. Now, essentially, you know what your upfront risk is. So the potential risk on the trade, for example, for the trade to be higher, the risk on the trade is £2,843.26 in this example here. So I'm looking for a £5,000 payout. If the trade wasn't to go my way, you would essentially, the risk on the trade is £2,843.26. That is the downside, okay? That is what the deposit is, that doesn't come back to you if the trade doesn't win. If it wins, though, the payout is £5,000 on that trade, okay? For the lower trade, the stake on the trade is £2,853.01. Again, the payout is £5,000. So if I win the trade, that is how much I would win on the position. If I lose the trade, I would lose my stake, which is here in the red. That is the stake. That is the upfront risk. You are made aware of what your risk is, all very transparent. You know what your risk is, you know what your profit is. And of course, you don't have to trade at 5,000. You could be trading at £5, £50, 500, 5,000 or more. Depends on the size of your trading account. And you can trade from as little as £2 on a trade all the way up to, in the thousands as well. So you can manage your risk. It's completely under your control. You have all of the ability to understand your net profit and your payout prior to taking the trade. Okay, fantastic, good. So with that, let's go over to the technicals. Any questions or comments? Do let me know, guys. We'll go through some of the trading opportunities that we're seeing in the markets at the moment. And hopefully you won't lose any sound. So we just check in once we share screen. So bear with me as we do that. Okay, quick check-in. You can still see my screen okay, and you can hear me okay as well. Yep, fantastic. Thanks, Reese. Okay, super. So, first of all, we'll have a look at Australian dollar, US dollar first of all, because we registered a sell signal on this market earlier on during the week. And in fact, we came up to a critical level of resistance, which worked out very well actually for this sell short opportunity. We've also seen strength in the US dollar. So the US dollar index has ramped up over the last 2 or 3 days now from a very oversold condition that has put pressure on gold and silver, and we've also seen downside here on both Australian dollar, US dollar, and also New Zealand dollar, US dollar. Now, if we go over, so this is the daily chart at the moment, got very overbought on this market. We registered a sell signal earlier on this week. You can also match up all of this overhead resistance. That's worked out very nicely, taking advantage of an overbought condition. We've corrected lower, and we're essentially back towards a supportive channel at the moment, and we'll be watching to see how the price structure continues to develop this week. If we go over to the weekly chart, you'll actually see here where we're developing a railroad, where essentially we're almost having a very similar identical high and low and body of this candle, which has been produced so far this week. I would suggest short term, we may see a little bit more momentum to the downside for Australian dollar, US dollar here. We have seen a bit of a breakdown, certainly on gold and silver. We've already taken advantage of quite a lot of this move already for this market, but as long as we keep on getting lower highs, lower lows, and closes below the previous day's low or closes below the previous day's close, I would expect this market to continue the momentum to the downside until it can find support and essentially until we start to see our next buy signal. So for the time being, bearish on Australian dollar, US dollar. On lower time frames, if you trade this on lower time frames, you can take advantage of the small breakdown in price via binary, just trading off, for example, 20-minute time frames, 15-minute time frames, just looking for a break of minor support levels. Once you know what the overall direction of the market is, which short term at the moment is bearish. Now, New Zealand dollar, US dollar, this is very good timing because New Zealand dollar, US dollar has registered an overbought condition now for about 3 weeks, but it has been yet to really break down significantly until the last couple of days. So overall, on the close on Monday, we saw another sell-off. We saw a close back below the previous day's low, broke through some key support as well. We've started to roll over yesterday, closed below some support, and today, most notably, we've broken through key levels here, broken through a number of moving averages that we track. We've registered a sell signal, and very clearly you can see overhead resistance here. I mean, it doesn't take a rocket scientist to be able to see this sort of resistance overhead at the moment. Very clearly, New Zealand dollar, US dollar has got overhead resistance at the moment. It's starting to roll over. It retested the 21-day moving average today. It's not by any means just a straight move. Once oil gets moving in either direction to the buy side or the sell side, tends to really register very clear price structures where you can see it just really starts to pick up momentum to the downside or the upside. With New Zealand dollar, US dollar tends to be slightly different. It will break down in price, then retrace, then break down and retrace, and you have these opportunities to get in at better prices. So I would look at this market as an opportunity to sell at this very key level of resistance short term. Certainly the momentum today, if we again get a lower high, a lower low, and a lower close, suggests that we could get more downside. We have the minutes of the FOMC statement, which are coming up in 2 hours, which will probably lift the US dollar. Could certainly lift the US dollar if it's another hawkish FOMC. If the minutes are hawkish again, as the FOMC statement was 3 weeks ago, we could see that provide a little bit more downside for the Australian dollar, US dollar, and also for New Zealand dollar, US dollar as well. Now, so overall, short term, I'm bearish. So essentially, I'm looking for more downside for both of those commodity currencies. Now, moving over to US dollar, Canadian dollar, it's been interesting actually because this has become extreme oversold. This is the most extreme US dollar Canadian dollar has been in quite some time. So if we have a look on the chart here, this is actually the most extreme it's been since approximately about June, July 2014. So we've become very oversold on this market. And the fact that it moves inversely to oil, and oil had quite a dramatic decline today. Now I'm going to bring up another chart here. If the sound starts to wobble, just let me know, guys, and I will just make a quick tweak my side. Sometimes when I'm opening multiple applications during a webinar, it will affect the sound, but hopefully that won't be the case. I just want to show you the oil chart at the moment. So this is oil at the moment, and you can see here, this is WTI crude oil, US oil, has had a really nice run up over the last week. We've taken advantage of this breakout to the upside. It came all the way up to major resistance, and again, we found resistance spot on at the 50-day moving average. And this has been really interesting because we utilized that as a profit target yesterday. So the 50-day moving average has been hit spot on. The price paused at that level, could not breach at that zone. Also, we saw a lot of traders who were away or getting ready in America to go away for the Independence Day holidays. And last week was also the end of the second quarter of the year here for, well, essentially it was the end of the second quarter, but certainly for the financial markets, the impact that has is that a lot of traders will start to close out their positions and balance the books for the second quarter. And what that would have meant is a lot of traders who are taking advantage of this big sell-off to the downside for oil would have started to bank their sell short positions. We start to see short covering. That short covering increases in momentum, and very quickly the price bounced $5 from 42 US dollars per barrel up to 47. Now, what has been interesting today is that oil here has broken down very fast. It is broken, in fact, it's given back a lot of those gains over the last 3 days. It's currently sitting around back at $45.36 per barrel, and it's actually registering a sell signal at these levels. Although we need to wait until the close today, we've got the API data coming out a little bit later today, and we've also got the oil inventories coming out tomorrow as well. But if we were looking to take advantage of this pressure to the downside with oil, if this is it for the short-term rally, and we're going to see a correction off the back of overall oversupply in the oil market, this is where we could see a lot of momentum build up for US dollar, Canadian dollar to the upside. So bringing you back to US dollar, Canadian dollar, what we're looking at here is if oil now starts to roll over. So essentially, we've got the first signs here of a sell signal. For an aggressive trader, we'll see how it closes today. So we've got approximately about another 4.5 hours, but this would be the first sign that it's worthwhile to look for a short opportunity on oil if this was the close, because we've essentially produced bearish engulfing candle, given back quite a lot of gains here as well. There is the potential to also now form a bear flag formation here as well, where essentially you can see where we've been within this recent trend channel. We could break through support, and then we could see it roll over yet again. Now, I would be interested to play this via US dollar, Canadian dollar, because the risk to reward is much better. It's come out of such an extreme oversold condition. And again, from this point of view, from a binary trade, we'd just be looking for shorter term trades based on lower time frames. So if you imagine, if you drop it down to the 30-minute time frame or even the 1 hour time frame, you look initially for a breach above resistance here, above this resistance zone, approximately a 1.301. You pop above that level, you look for short-term trades for the price to close higher. Could be half an hour, could be 1 hour trades for the price to close higher. 4 hour chart, same thing. If you get a breach above this level and a close above it, you look for the price to close high within a 4 hour time frame. And then, of course, if you pop it out to daily, you start looking for a bigger rotation higher on the daily chart as well. We've already started to register a buy signal on US dollar CAD. It's coming out of a very oversold condition, and I like this potential for more upside. So I'll put that on your radar as well, that I would watch the potential for more upside here with US dollar, Canadian dollar, if we see oil continue to break down. Remember, there is that inverse correlation between those markets. Finally, I also wanted to show you gold, and gold here has been interesting because we discussed this yesterday on our live trading room with all of our traders, that you want to be very careful about selling gold around the 1220 level, and we've seen a lot of support at that level previously. If you look at lower time frames, there is a tremendous amount of support and buyers coming into the market around 1218, and if you're watching this, if you got it on screens where you can see this lower time frame, even if you drop it down to, for example, the 15 minutes, you see these sudden big bids here around the 1218 level, which is providing support. And previously, when we saw that happen on the chart, going back to approximately this zone of around mid-May here, this is where gold held up. It then continued to rally and bounce at that level. You can see we're finding some support here. What does that mean? Well, essentially, we need to go a little bit deeper into the price structure here. What I would suggest is we can just have a look, just for a little bit more detail, look at gold price in Australian dollar, US dollars here as well, which is actually starting to show signs of a short-term low in place here. So this is gold price in Australian dollars, and also gold priced in euros is getting a bit of a bid here as well. Yesterday closed with a positive gain, and we're starting to build a bit of momentum after breaching through the swing lows of December 2016. So what does that mean? Well, it means that I would be careful about looking for a sell here on gold. I don't believe it's ready yet to buy yet, but that could change on tonight's minutes of the FOMC or Friday's non-farm payroll. I think gold is at a great level here to take advantage either of a washout move. So if it really breaks down significantly below 1215, it could wash out down to 1200. But if it gets supported at this level around the 1220 zone and then continues to break out, could start to build a stronger base here, particularly on a closing basis if we see enough support on gold here. So I would definitely watch that as well. So for me, there's a lot for us to be keeping an eye on, a lot of trading opportunities. It's been a very profitable week so far with our sell shorts on Australian dollar, US dollar, New Zealand dollar, US dollar, gold, and our long on oil. And now we're looking to reverse a couple of positions as well. So US dollar, Canadian dollar, I would definitely keep an eye on for the long side as well, for the potential buy side. Okay, fantastic. So with that, guys, as I mentioned at the beginning there, if you would like access to our live trade ideas every single day throughout the week, our positions that we're taking at the Gold and Silver Club, just go to www.jointhegoldandsilverclub.com, complete the application form. We'll, of course, get in touch with you ASAP. I put the link there in the comments as well. Whether you're a new trader or an experienced trader and you really just want to take your trading to that next level, if you enjoyed today's session, but you also want a bit more on the execution side, the implementation, you want regular trade ideas sent to you every day, do make sure you check us out via www.jointhegoldandsilverclub.com. By being a member of the Gold and Silver Club live trading room, you get access to commodity research, trade notifications and ideas by email, SMS, live trading room, webinars. You get access to our private members live trading room, where you get our live trading room webinars during the week. We've got another 2 this week. We've got one tomorrow and also Thursday prior to non-farm payroll. You get our live trade ideas shared with you, ready to implement, real-time notifications via email and SMS so you don't miss trades, exact details of where we enter and exit each position, access to our private members live trading room, ongoing support and mentoring to help you achieve long-term success, and exclusive access to our proprietary trading research to give you the edge in the market. So again, guys, all you need to do is go over to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, I wish you all good trading. Have a fantastic day. All the best, guys, and we'll speak with you real soon. Okay, take care, everyone. Have a great day. Thanks, guys. All the best. Bye-bye.